Hey, good afternoon, everyone. It is Tim here. Let's just jump right into the review of what the charts look like. Not a whole lot of stuff to really talk about, other than the stocks report coming up on Friday. Right? If stocks are tighter than expected, then I think things get pretty exuberant to the upside. If they're not, I don't think it's a real big deal because I think the market's already priced in big stocks and and a big crop. So we'll just have to wait and see what happens there. But for today, what we have here in December corn is a not insignificant day. So you can see the low here on September 19th, right, where we had the spike low hook reversal. We got two closes here and a bullish engulfing day. We have the follow through and then a bearish engulfing day, followed by, and this would be last Friday, which was a real small piercing pattern, followed with a engulfing day on Monday with that fully retraced the move from this down move here. So that was a significant little chart pattern. Yesterday kind of squirreled around right in the top side of this range, and now today we're up and out with another bullish engulfing bar and back up above our hedge line. So and you can see we're right back into the thick of all this stuff. Remember, the funds got their entire short position on inside this trading range. So any move up above where we are buries them. They don't have anywhere to go but out if that's the case, because they've had a position on now for nearly 60 days and they don't have anything to show for it. And if they start to get some pressure put on them, I think that they'll have to cover. What's the fundamental catalyst that will do that? I have no idea. I don't know that will happen, right? I mean, we are in the middle of harvest, and this thing can turn around and reverse. So I think corn's in a really simple setup. You want to have reownership on from here, and you want to make sure that your downside's protected below here. It doesn't need to be any more complicated than that from where we are on the right side of the chart. Okay, now let's look at soybeans. Soybeans, I think, are a little bit more complicated because of the volatility that we're seeing. But if you want to look at beans kind of from a big picture standpoint, okay, and let's take this all the way back and look at the entire lifespan of this November's contract. We come all the way from $9. We come all the way up to the contract high here at $14.49. We have this big sideways consolidation that has been going on since April of 22. We've been choppy. It's been two-sided. It's been all over the map through here, and now here we are, kind of in a new situation. So where does that put us? Well, this is a five-wave move up. This is corrective. It's overlapping, and it's contained within these parallel lines. So this move from the July 24th high to today is corrective. We are starting to get some bottoming action here. If you look at September, we've had 2 days up, big down day, 2 days, big down, 2 days, and then we get 2 days down, 2 days up, one big day down. And now we've had 4 days to kind of unwind this chart pattern, but we haven't gotten any explosion to the upside. But I think it's coming, and the catalyst is pretty obvious what that should be, right? That should be a supply shock because the yield is less than what people are anticipating. But let's not make it overly complicated. What we want to do is make sure that below this level, right back here, which would be below this low, we're fully hedged, and up above here we want to make sure that we have reownership on. And by the time we get up into this 1350, for sure 1372 range, we want to have full reownership on, because I think that means that we're probably going to take out all these highs and move on up. Whether we do that in November or March or May, I don't know. But today, that's what this chart is telling us and how we're viewing it. So we're hedged, but we're opening the upside back up with calls. Pretty simple. All right, Kansas City wheat. It had a bad day today. It ran stops down below 7, and I guess it felt like it just needed to do that. made the divergences even more more significant, more substantial, and it also ended up giving us a red 13 here on wheat. Could it just accelerate lower to the downside? Yeah, anything's possible. Do we think that that's the most likely thing to happen given the current technical setup that we have? And the answer is no. So a good position to be on is to have your cash in the bank and have ownership on paper back up for some type of larger move higher. And I think it kind of depends what corn does and what happens in the rest of the world. Wheat's been getting pummeled because Russia and Ukraine are dumping wheat below market values. And so what that means is that the world futures markets are really holding fairly steady, and ours is taking the premium out of it to become equal to or less than what they're doing in Ukraine. And I have no idea why that's necessary, because if they're dumping it for political reasons, then that doesn't really have anything to do with the value of wheat. All that does is tighten stocks. And with India, Argentina, Australia, and us all in a situation where we have tightening stocks, you don't think that there's a whole lot of downside mobility here, particularly if corn gets strength. So I think that this is a good signal here to trade off of. And start to look at today's low and really down here at the 668 level as anything below that we want to make sure that we're long and have ownership on, because like corn, the funds have established a position here, and if it starts to take out some highs, and I know it has to do that, and it hasn't been willing to do that yet, but once it does, then that short covering can get pretty powerful pretty fast, and you can find yourself, up 25, 30 cents 1, 2, 3, 4 days in a row, and pretty soon you're trading up here at $8 and scratching your head wondering how you missed the move. So wheat is not a place to sell. It's a place to intelligently position yourself for re-ownership, because I think the next most likely move is higher. I know we've been saying that for quite a while, but today's signal, which is all you get to do, is look at today's chart on the right edge. This is better than any of the other buys that we've had because of the continuing growing divergence, and now we have the 13 on there. So not a guarantee ever. Nothing's a guarantee in this business, but you got to make the best decision you can with the information at hand, and that's a buy signal every day in our book. All right, that's what I've got for you so far. I would say too, look at crude oil. Crude oil has been going ballistic. It was up. Right now it's up 265. It's well over $90 in December even. So gas is getting more expensive. That's bullish for beans. That's bullish for corn. And if those two work higher, I just don't think you're going to take wheat to below the cost of corn. That just doesn't make a whole lot of sense in the economic sense. So we'll have to see what traders decide to do with it. All right, with that, we'll be back with you either tomorrow or Friday, depending on price action. Probably Friday because of the quarterly stocks report that does come out during the trading day. We'll let you know what that is. We'll let you know how the market reacted to it. But for now, I think long is where we want to be. I think the conditions are getting stronger for that, not weaker. And technically, they're starting to come in line with that, even stronger than they already have been. So I hope you guys have a great night. Remember, there's always risk trading futures and options, and you should only do so in light of your own financial condition. We will talk to you on Friday.